Grab your pen and paper and your wallets. In today's Money Watch, we are looking at the Federal Reserve's interest rate decision happening in just a few hours from now. CBS News business analyst Jill Schlesinger is here to tell you what it could mean for you and your pocketbook. Jill, good morning.
Good morning.
So you recently said that the Fed was waiting for clear signs of an economic slowdown before adjusting rates. What are you expecting today?
No action. I think it's pretty likely that the Fed is going to remain patient, take a wait-and-see approach. Remember, last year they cut rates by a full percentage point. They haven't made a move since last December. That means short-term interest rates, the Fed funds rates, remain at 4.25% to 4.5%. They really want to make sure that we don't see a big surge in inflation from those tariffs. And they haven't seen that yet, but they fear that in the next coming months, we could see that move.
So what does that mean for people trying to save some money?
Well, if you're a saver, it's great. I mean, it's crazy right now. You can go online and find savings rates at 3.5% to 4.5% for high-yield savings accounts, CDs. But borrowers, boy, is it tough. If you look at average credit card interest rates, over 21%. Wow. You go buy a new car, you get a 5-year loan, it's 8%. And even though the Fed does not actually control mortgage rates, we know mortgage rates are just under 7%. So bad for borrowers, good for savers.
So how do you think the conflict, what's happening in Israel and Iran, could affect the economy here? It's got to mean something to us.
I think that it adds another layer of uncertainty. And we see that most directly in the energy markets. You know, in the last 5 days, we've seen crude oil prices pop up by 16%. The only good news coming into this for those oil markets is that we are down still from a year ago. But if the conflict persists, we will likely see a real shooting up of your gas prices, and that could impact inflation and certainly the Fed as well.
Now, retail sales dropped more than expected last month. President Trump, he wants the Fed to cut rates to boost the growth. Does he have a point?
Well, listen, before the Israeli-Iranian conflict emerged, I think that there is a real slowing down, and you saw that in retail sales. We see that in other measures of the economy, that job growth is slowing down. But again, I think the real issue for the Fed is not where we are this minute. It's where we will be in a few months. And to be clear, before the tariffs were announced, the Fed thought that it was going to cut by a full percentage point this year. So without the tariffs, the Fed would be cutting, and they would be aligning more with the president. But those tariffs, now the war in the Middle East, adds a layer of uncertainty. I think the Fed is really on the sidelines, at least for this meeting, maybe for the July meeting as well.
All right, Jill Schlesinger, thanks as always. Appreciate it.